Eric Muathe with another Rethink video, today being Thursday, February 6th, 2013, and it's about 6 minutes after the market open here. We are looking at Twitter, which is trading down about 23 points for the day in what has been a overnight drop because of earnings. And let me show you some of the things that the market is saying about the stock on the news front, which is something that I personally don't even pay attention to, but just for the sake of explaining the charts, let me show you that. So that's how it's looking like early in the morning, down 23%. Now let's take a look at the charts, because I think the charts have something to tell us here in terms of how to appreciate the technicals. This is Twitter, and you can see what we are seeing today is confirmation that what goes up can come down. Okay, quite evident. Now let's take a look at the daily here. That was the weekly, and what I want to look at the daily here is take note of this point here. Just draw a straight line there, and you can see ever since we broke below this RSI support level here, which signified the top or this break, we've stalled here precisely at that point. That was where the stock was trading before yesterday's earnings, so it was a trap right there. And also notice that we had a break of this channel here. There, you see that? So this again was a break point. You draw a straight line from the break point, and you see that straight lines comes precisely at the high of the recent move here. So the break line becomes a resistance again, just like the break line here became resistance on the daily RSI. Now let me take that off and show you something spectacular here. Is remember, I'm always talking about these numbers here, 69.10, and also just the understanding how 50 works on the daily RSI or on any time frame as far as the 50 level is concerned. Take note of a couple of things here. One, take a look at the angle of penetration back below 69.10. It is almost identical to the angle of penetration below 50. And you can see that once we move below 69.10 like we did here, that was for a big daily drop, this red drop here, big daily drop. And today we are seeing a big daily drop, sharp angle of penetration, and also the fact that we are moving below 50 means that this is always going to be a big down day. So it makes sense that the stock is paying attention to the technicals in terms of how stocks respond when they trade around this Fibonacci numbers and how to understand how they trade. So that all makes sense. At least it makes sense to me. If you take a look at the hourly, and I've been talking about this on my charts for a while on the stock, is there was a break on the RSI right there. You have to understand this because it's very simple, and it's just every stock has its own behavior. But this was the break, which happens to be this break around here. So you extend the line from that break point. It's very simple, and you'll see that every time you hit that line and stall, it becomes a high to go short, especially if you're a short-term trader. You hit that high there, the stock never moved above that, had a short pullback. You come back and you stall in this general area here, can't move above that, so eventually that is big resistance, and that makes sense while we are down. Okay, also take note of the fact that there was a break point somewhere there. So this was a break. Draw a straight line from the break point of that, and you see that every time you stall here, sell point, and recently we hit that on the hourly and stalled. So all this action in the stock makes a lot of sense as far as I'm concerned, and it makes sense that today we are down the biggest for the stock, biggest down day, because we are also making the lowest hourly RSI penetration, and that penetration is also moving the stock for the first time below 30.90. Eric Mwathe, good luck, peace, and blessings.